this whole panel is going to be focused on this concept of embedding. If you are a financial technology company, you look for an alternative universe to plug into for some benefit. And we'll talk about both benefits as well as trade-offs. Is it symbiotic? Is it parasitic? I don't know. It's going to be up to you guys to figure that out as we go through today's discussion. So why don't I start off with a quick introduction of the folks that we've got on this very exciting panel. Everybody up here, including your moderator, do something in and around embedded finance and embedded financial services. What I'm going to do is I'm actually going to, because we only have a very short period of time, I'm going to encourage each of these three amazing panelists to say the name of their company and how their company qualifies to be up here on this panel talking about embedded financial services. So first, Derek, hi, good to see you.
Great to see you, Michael. Thanks for having me. It's great turnout. Lots of folks all over that we work with and hope to work with down the road. Really quickly, I'm Derek Szeto. I'm the co-founder CEO for Walnut. We are embedded insurance. And so what we do is we help partners be able to offer sort of the right products at the right time. And we love to be able to leverage data because we often think about insurance as sometimes maybe not the most exciting product. So how do we make it sort of within the flow, within the customer journey, and help our partners get to the destination? We work with 2 of the big 6 Canadian banks, 3 of the big 3 neobanks, and Coho, Wealthsimple, Neo Financial, 2 of the big 3 telcos. And everybody's a little bit different. Back to it's all about like what do they know about the customer that is relevant for insurance, and what are the right products and services that we can help them deliver in a seamless fashion. Go for it.
Super cool. Along the lines of boring, our business is a embedded payroll business. So we actually help other companies commercialize their own payroll software. That also ranges from banks. We work with ATB Financial on ATB Payroll, all the way down to startups who are trying to revolutionize the way that payroll works in Canada specifically. We really simplify everything to do with the back end of processing payroll to allow our partners to focus on building awesome experiences.
Yeah, and to round it out, I'm Scott, co-founder of Slate, and we do embedded lending. So think fintechs, vertical SaaS platforms, even banks, empowering them to offer lending to their customers.
Awesome. All right, so we're going to double click now on what you get from embedding. So I think the typical way, and even the way that this was framed, the fight for distribution as the name of this panel, seems to imply that the benefit that you get from being a company that then plugs into a much larger ecosystem is distribution, maybe lower cost of acquisition. But I actually think that that is just the tip of the iceberg for almost everybody up here on this panel. So why don't we go a little deeper and say, what's the payoff? What do you get from being embedded? We're going to start with you. I'm going to start with you down at the end because you put your mic up fast.
Besides the distribution, we get data around the borrowers. So like whether that's risk and qualification to understand, can we give them capital, or if it's as powerful as does this person need the capital. So, if we have all your data on your platform, we know your payroll's due on Friday, we know you have invoices coming up next week, and we can see your cash balances, we understand where that cash flow gap could be, and then can target you with those lending offers that actually make sense for you, and not just the distribution spray and pray play. So there's a lot of just context around the SMB borrower that we get through a platform.
Yeah, I would say that in the context of embedded payroll, the benefit is very similar. Most payroll platforms historically were standalone solutions that lived outside of the workflow of a typical business. And by being an embedded platform, we get to integrate directly into the workflows that business owners are already running, which simplifies the process of running payroll. And often that is the access to the data that powers payroll. So we work with scheduling software providers as an example, and they already have the hours that are required to pay employees. And so for the business owner who is using that scheduling software solution, all of a sudden running payroll becomes easier. So it's one part about, for us, distribution, for sure. The other part is about being able to deliver a better experience for the people who are actually using the products that we help build. And I think that's really important.
I think really quickly, like just to double down on that, it's the experience. Like, back to insurance is not the most loved product. So how do you help people get what they need in a low friction manner? And if you know that, they're in a property journey and they're buying a home and they need home insurance, or if they're a tenant, they need tenant insurance, the fact that they need it and you can deliver it with low friction without having to re-ask them all the questions means the customer is happier. It's actually also, from a matching perspective, it's better risk. And so for the insurance partners that we work with, we're always thinking about how do we match. And if you're in a consistent flow, that's actually better risk than getting anti-selected again, sort of in an open marketplace.
So I want to stay on this topic because my original question, but it morphed along the way because that's what happens when smart people get on panels. My original question is, what do you guys get out of this? Like, what's the benefit beyond just cost of acquisition being lowered? Are you getting data elements? Are you becoming a better service provider as a result of doing these integrations? What's in it for the partner, right? So you have to go to the partner platforms, plural, and convince them that it is in their best interest to not have something that they've built themselves. In fact, to work with a third party that is going to extract data out of their system, sit inside of their system in some way, shape, or form, and deliver services that they don't get to fully control. That's a big ask. So maybe, Scott, we'll start with you and we'll go back in this direction. What's in it for the partner?
Yeah, and obviously revenue, but that's the less...
What? People are greedy? What? Is that insight?
I think, that's the obvious one, but I think what we've learned is actually this like stickiness and adoption of products they already have on their platform. And so a lot of our early partners have used lending to drive their customers to some other feature, whether it's payroll, which could activate a payroll, lending type of product. So like ultimately they're using lending as a tool to create stickiness, drive where they want their customers to go on their platform, and then ultimately make revenue, as a revenue share.
Yeah, I think that, my guess would be that our answer with regard to each of our products around stickiness in particular is going to be true. But often offering any of our products, certainly for payroll, it's building that product is extremely hard, right? Whether it's the regulatory moat or just the complexity of some of these embedded financial products, building them is tough. And so being able to add a sticky product, whether it's lending, payroll, insurance, in a way that is extremely low friction for the partner, I think is of huge value. In our case, most of the companies that we're working with have customers asking them to sell them payroll. Like they're like, hey, you have all of our hours, why don't you sell me payroll? Or you're my bank, you have all my money, why can't you help me pay my employees more efficiently? And so, again, we're taking the friction out of offering a product that I think in all three of our cases, the customers also want. And I think there's a ton of value in that, especially when, product roadmaps are tight. In general, teams are running leaner these days than they maybe were 5 years ago. And so being able to launch a really high value product without having to do the, massive investment is huge.
I think it's going to be like similar theme. It's always some combination of, are they trying to generate revenue or are they trying to generate stickiness? We think insurance is actually really valuable from both of those avenues, and you have levers to be able to pull to see like where you want to play with that. And then the other thing, as we work with a lot of different partners, we can help bring expertise to the table because we see both from the big banks and the smaller ones and from startups, like how do we help them move a little bit faster? It's not that they can't do it. Like we actually encourage folks, if they want to do embedded insurance themselves, like go for it. We want to see more embedded insurance in the world, but it's a lot of lift. There's a lot of regulatory hair for a lot of these products. So how do we get them to just move a little bit faster? And we're not opposed. Like we're a partner to them. Our customer is actually the distribution partner number one. And so if they find a space where they want to build out, we're happy to help support them as well. And we don't need to do all the things. It's an ecosystem at play.
So this is the second time you've been a good shill to my next question. So thank you, Derek, which also means I'm not going to start with you. I'm going to go to the end again. But a lot of times on these panels, we come and we just tell you everything that has worked. And so what I want to do is to ask you what hasn't worked. And again, you don't have to do names because who knows, there might be somebody from one of these organizations here. We're not going to chuck anyone under the bus by name, but feel free to chuck them under the bus at a high level. So when we talk about embedding And this idea in a perfect world that you've got a partner, you're both symbiotically interested, you have long-term compatibility, the data sets work really well so that the customer ultimately ends up being beneficial. They move really quickly, just as fast as you're willing to move and evolve with you over time. Let's call that the best case scenario. Give me an example for people here to learn as you're thinking about your own embedding journey. Give me some examples where it didn't work, right? So Scott, just pick one. No names, of course.
I think, yeah, one of our early partners, we were actually trying to move fast. They were not. And so pushing them to move fast, we, took the path of least resistance to launch. Like, we could get this out today, no problems. And I think this was a very early customer, and so we, have obviously learned since. But one of the issues that came up was around privacy. And so a lot of these platforms that are serving customers, when you're thinking about the future of adding products to your platforms, like payroll, insurance, lending, this data sharing and privacy around that is super important. And so what didn't go well in this case was their existing terms of service and privacy agreements didn't necessarily allow for them to share that data with us. And so we quickly learned, that's one of the first things that Slate has to do in our own due diligence of the partners we work with. So, yeah, I don't want to say it went terribly, but it was just a very big obstacle that we had to overcome and slowed it way down.
Yeah, I think in a similar vein, when we first started our business, 2023, we were really eager to get to market and to deliver revenue for ourselves, for our investors. And at the same time, like I mentioned during the last question, one of the key value adds for all of our partners is to be able to wave this magic wand and have a product overnight. And so we were really eager to launch something quickly. And our first batch of partners were really eager too. And we didn't know better than to let that move really fast. And I think what we've learned is that even though an embedded product might allow you to get to market faster than you would be able to if you built it on your own, you should still take a lot of time thinking about what that experience looks like, what the data flows are going to look like. We haven't hit the privacy issue, but what the legal terms look like. I think all of that is something that we've learned since the beginning. And today we actually have to help our partners slow down their eagerness to get in market with the new payroll product and really make sure that it's tested before it's not just live, but pushed aggressively to their customers.
Just really quickly, I think two things. Some of these I think now are fairly obvious to us, but not necessarily at the beginning. One, the customers that pay and want to pay and are willing to pay up front and want to do technology integrations are much more successful. We've had some where they like the concept, but really they just ultimately want a link out and they don't want to pay any sort of setup fees or SaaS fees, and they want to try it and they're just dipping, and it makes it hard in an embedded world. We want the logos, we want to get out there and show them it's going to convert, but it is important to have a degree of alignment on they will need to do some work. In an embedded insurance model, it's not that you can just give it all out. I do think AI, back to I'm sure everybody's sick of it by now, helps with that. It makes it a lot easier. You can just point the agent to the integration, makes everybody's life easier. So there is a lot of acceleration in that space, but they have to be at least a little bit committed to do some work. Otherwise, it's just not going to work.
So what I want to do is zoom back out and talk about, so I think we've got a bunch of startups in the room. Do we have startups in the room? Startups? Yeah, startups. Okay, we'll do a startup question. And then I'm sure we've got banking partners in the room, financial institutions, pockets of dough. You guys, you're sheepish about putting your hands up because you do. I just identified the startups and everyone's going to zero in on you. So let's do a question for each of those two audiences. So let's start off with the startup question. So an embedded platform inherently has a dependency on a set of partners, in essence, for your customer base, for the data sets that you guys have talked about, that integration. From an investor perspective, that could mean risk, right? It could mean you're not in control of your own destiny, you don't have a standalone brand, there's risk that you're going to lose some of those partnerships or someone will outbid you in terms of revenue for those partnerships, and it could have an impact on valuation. How have you navigated the embedding actually makes us more valuable versus embedding is a risk and you should, not invest in this company? I'll start with you, Derek.
From an insurance perspective, if you look at sort of the history of time in InsurTech 1.0, there were a bunch of companies like the Lemonades of the world who raised hundreds and hundreds of millions of dollars to go direct to consumer. By and large, our belief is that more insurance is going to be sold in an embedded manner over time. That's the bet. And part of the reason is that nobody wakes up and says, I'm really excited to buy insurance. Let's go buy insurance today. If you have an insurance app, you're not going to get them to open it up multiple times a day. So for our view of the world from our product lens, it just makes more sense. We think it's better for the customer, and it's actually better for risk, because if you just blast your name out there at millions and millions of dollars of cost, you are actually going to get adverse risks. So from an insurance perspective, it's actually really valuable, and it has everybody sort of in the ecosystem win, because distribution gets something, the insurers who are carrying the risk get something, and then from us as a business, it's much more capital efficient to build a business like this that will have strong loss ratios. The insurers that work with us, that's also what they want. They want us to match them with opportunities where they can get distribution, but they want that to be a strong performing book where they're not seeing large losses, and embedded actually helps with the risk management component as well.
So I think all of us are likely biased towards the positives.
That's why you're entrepreneurs.
Yeah,
you're
we can fight
relentlessly delusional. That's why we're entrepreneurs.
And so, actually, I agree with everything he just said. And in the context of payroll, a lot of that is also true. But at the same time, I think that it's fair to note there are disadvantages to being an embedded provider. Not so much around the control or the risk associated with giving up that control to a partner. I actually think that relationship, because it is such a involved relationship, is very sticky. It's very valuable. Just there's a lot to love about that. But for each embedded provider, I think I've heard this not just from peers, but as well from investors who invest in embedded products. The biggest drawback tends to be the delay in realizing revenue. All right, there's a significant delay in bringing a product to market. We have an amazing payroll product, essentially, that lives as infrastructure, which could be deployed tomorrow overnight. But every time that we sign on a new partner, we work with that partner to essentially go ahead and build from scratch a new workflow that takes them time to construct, and then bring that workflow to market carefully, like I mentioned earlier, which takes time if you're doing it right. And so the thing that we ask from our investors is really patience. And I think that that's unusual in a world where everything's moving at the speed of AI, right? If every company is like 0 to 10 million in ARR in 2 months, which is like I don't know how real that is, but there's a lot of those stories out there today. We're kind of the opposite in many cases. And so for us, it's important to identify investors who understand that, and to be real about that with ourselves when we're planning the business, which I would consider like the only real disadvantage, because I agree there's a ton to love about the embedded model.
Yeah, I guess the only thing I'll add is that these are really hard businesses, to pull off, kind of like you're saying. And I think that actually is becoming more attractive in the investor world.
Like hard businesses are becoming more attractive?
Where
The harder it is, the more I want to invest in it?
I just mean we can't be vibe coded this weekend. And so what Simon just said around how much effort goes into these integrations, these partnerships. Again, you cannot go Claude code. Somebody can't leave the room today and have embedded lending by Monday. So I just feel that shift from 2025, when we were doing our first round, to now, the attitude has shifted, I think.
So that was the startup question. This is going to be the bank question. So we have some folks in the room, even if they're sheepish, that are with financial institutions at some level. And the fact that you're here means that you are innovation curious. That's my title for you. You're here at this conference because you're innovation curious. And in a perfect world, you have something meaningful that comes from a panel like this that you can take back to the mothership, fathership, whatever, and say, hey, listen, I have a really interesting idea for something that we could try out, a pilot, an initiative to prove something. So if each of you were talking to one of these financial institutions and you were to want to give them a thing that they could go back with and a pitch that they could make back at their mothership, what would it sound like? Derek?
I think our view of this is that like everybody who has a large customer base, who has some data about those customers, their customers need insurance. So the question would be, if you look at your customers, what are they spending money on in the insurance bucket? It is probably higher than you might think, and you can help them with that. And how can we and you as partners be able to accomplish that? Like, that's sort of the question. It's not a one size fits all, so it has to make sense for your business. And if you know something about your customer, you're already well ahead of the game.
I think that on a similar line, everybody who works gets paid, and so everybody needs insurance in some way, shape, or form.
Not enough. Not in startups.
Yeah, maybe that's not a true statement, but in the same sense that everybody needs insurance, I think everybody needs payroll in some way, shape, or form. And from what we've seen, the world of traditional financial institutions and payroll have really been accelerating a merge over the last couple of years, and I think that that's born from the fact that today, more than ever, there's a lot of challengers who are threatening established financial institutions, and those challengers are innovating predominantly around what products they offer. They're trying to offer more, they're trying to offer better experiences, and I think that payroll can be an incredible way to offer customers something that they definitely use, that is likely to be offered by challenger banks or challenger financial institutions, and yeah, we're really excited about the work that we're already doing in that space. So I think there's a real opportunity.
Yeah, and I guess in lending, historically it's been expensive to serve some of these small businesses, and so we think partnering with somebody like Slate really opens up the affordability and the feasibility of delivering these services to your customers. And I'll just add that a lot of your customers are going to other places, I guess kind of like you mentioned, to find this, and they're not having good experiences either. And so partnering with one of these embedded players allows you to keep that experience in your ecosystem and really deliver value to your in business.
Yeah. And the one thing I'll add, just from my own experience on the same topic, having worked with a set of financial institutions over the last 13 years with our business, is that the bigger you are, the harder it is to really innovate. And the harder it is to do something small, and almost every one of these things has to start small and detailed if it's going to work ultimately, right? And so for larger financial institutions, almost financial institutions of any size, that are regulated, that have a whole bunch of infrastructure that makes it very hard to start small things, working with a fintech to identify something small and piloted with managed risk is actually an excellent way to test innovation without a big expense and without a lot of heavy lifting. The fact that Tal just walked in scares me and makes me think we're out of time. Tal, how much time do we have left? Do we have time for a question? Yeah. Okay. We can take a couple of questions. I have more questions to ask these guys, but I get to see them more often than you do. So if there's anyone here who's got a question in and around embedded lending, partnerships models, working with big FIs, startup, what they had for lunch yesterday. Anyone? Anyone? You guess your last chance? Okay, so I'll ask one last question here then to take up the balance of the time. So again, having done this ourselves over the last decade, there is often this desire by these partners to really have something that is unique for their platform. Right? They know that you are a service that can go ahead and plug into other platforms and ultimately treat them like a bit of a commodity. So I'm guessing that in your experience, if it's similar to ours, each of these partners says, hey, this is what we're going to do that's a little bit different. Here's a way that we're going to take this embedded product and really customize it so that if you do it with anyone else, it's going to feel different over there than it is here. That creates a problem for you, because now you're managing multiple versions of who you are and how you are in different channels. Have any of you guys wrestled with that? And if you have wrestled with this question, how did you resolve it? I'm going to you first. That's right. I'm looking right at you, Darren.
Okay. I mean, ultimately the customer's the boss. If they really want it, then we can help them find it. At the same time, we're a matching process, so we have to find the capacity. And even if we want to do it, doesn't mean the insurers feel that they can do it and it's a large enough opportunity. The way we think about this is largely this is in phases, right? So you can't sort of go and blow the doors out, day one, recreate a new product and think everything's just going to work. It still has to be like learning and testing and iterating through. So the lowest risk, to your point, and for the enterprises is to start with something often off the shelf as like V1, see what you've learned and, if it's a product construct, what didn't you like about that? And then if you found success, you can say, hey, in V2, we'll make these changes. There's traction with the insurer because you've sold some, policies, drive some GWP, and then you can get to customize. So we typically, like, unless there's a special need that you need to have something unique out of the gate, we prefer to start with something more off the shelf, and then we'll get there, and then we're happy to get there. And if they really want it, then we're happy to do the work. But like from a guidance and market perspective, what we see is it works better to start smaller and then sort of grow into something custom.
I don't think that we have that same luxury. In the case of payroll and with our partnerships, every single integration is extremely customized because in some cases, the platforms we work with already have employee information and employee experience. In other cases, they don't. And so, we, day one, in every partnership, end up in a situation where that product is a net new product that's really unique. And one of the things that we offer is the ability to help support end users through our experience in our team. We've got a very experienced payroll support team, and so we make it our business to be very involved with every product that's in market. That creates this huge challenge around understanding the variances between the products that we're trying to help serve. And what we've had to do is essentially become the expert in every product that we have in market. From a technical perspective, everything's standard in the background. We don't build any customizations from an API standpoint that only one customer might be using. But every single partner has a unique experience in our whole team, from product through to engineering. And that customer support team needs to understand those variances so that when we build, we're building or servicing with those things in mind. So it's one of the key challenges for our business, but we've gotten a lot better at it over time.
Yeah, didn't I say this was hard?
You opened with, this is hard.
Yeah. I guess I will say, though, different from what Derek was saying, we realized when we were going with the off-the-shelf model from day one, we actually didn't get as much investment from the customer or buy-in. And so we actually experienced the opposite. Like, okay, start with off the shelf, and then it doesn't, they're not as invested, they're not as bought in, they're not spending as much time on it. And so we've actually seen the more they're asking for customization, the better the relationship is going to be in the long term. Now, handling that is still difficult, but we've thought about that when we were building the foundations of the technology, maybe similar to what you just said, where in the back end, it's really all the same. And so to them, it's more like, we want some small nuance change that doesn't take us a month to, develop. But I guess I just kind of like when they want the customization because that's when I know they're invested.
A declaration of intent. All right, so we will end it there. The thing about the CLA that we love so much is that it facilitates conversations. So any one of these folks that you want to grab some time with, just go and grab them, see them on LinkedIn. Our job is to connect and make conversations and hopefully do something together. Thanks, everyone, for your time and attention. Enjoy your conference.
Thank you.